How the heck is it December already? If you dig data, we are going to run through the latest numbers in the Southern California housing market report. We have a lot of ground to cover. We're going to show you pending sales, sold, new listings. There's an interesting trend in Orange County that we're not seeing anywhere else. We're going to run through median home price madness. One of the counties just went negative. We are going to cover the Altos Research data. One county's not behaving when it comes to inventory. And stick around to the very end if you're brave enough, because we're going to run through a poll where we ask buyers what the heck they're waiting for now that we're beyond the election. And away we go. Strap that seatbelt on. We are diving into the California Regional MLS Multiple Listing Service data. We pulled these numbers straight from there to show what is going on with November's going all the way back to 2018. Why are we going back that far? We want pre-COVID, COVID, after COVID. We want to compare because the market has been very different. We're showing you the number of sold properties. We're showing you the number of properties that went under contract. So that's buyer demand. We're showing you seller supply, otherwise known as new listings. Now we can see an interesting trend in Orange County, and it's unique as compared to some of the other counties that we're going to cover as well. But we can see back in 2019, we had more properties going under contract, that's the white line, versus new listings. And that trend continued all the way until 2022, where it reversed. Now in 2024, it flipped again. We have the twist, as I've called it in the past, where we have more properties going under contract than new listings coming to the market. In fact, this November, and we checked these numbers several times, Michelle, who works with me, and my operations director, she ran the numbers, and I double check them as well when they look funny, which they look funny. We have the lowest level of new listings that we've had going all the way back to 2018. So we can see the lowest number of new listings and an increase in the number of pending sales. So this is going to be unique in Orange County. We're not going to see this in other counties, but we have that twist. This is absorbing inventory right now, and we'll see where it's headed into December. Now, I have a question for you. Do you prefer the data to look like this, which is how we've had it since we started running these, or do you prefer that same data in bar graphs? I want to get your opinion for this. Let me know number one or number two being the bar charts. I just want your opinion on how you like the data organized, and if it makes more sense to you one way or the other. Let me know in the comments below. Of course, our email newsletter subscribers get these charts and can look more closely at those. And here we go into LA County. Look at the massive drop we had from 2021 into 2022 for November. Huge drop in the number of pending sales. Big drop in number of listings. And speaking of new listings, back here in 2018, a normal year for the real estate market. 2019 was normal as well, but 2018, huge number of new listings in the month of November. And we haven't been anywhere near that. Now, we don't have the twist between new listings and pending sales in LA, but we do see an increase in pending sales year over year and 2 years year over year. So things are looking up for the number of properties going under contract. At the same time, inventory is staying down, new listings are staying down. So this is an interesting trend. We, in the news, have been a lot of people talking about price drops. Well, we also, historically, this time of year, have price drops. That's just what happens every cycle of the year for the most part. All right, moving into Riverside, again, a similar trend where new listings were at an absolute peak in 2018 as compared to the years we've been in, but we do see an increase. So we have new listings up as compared to last year. At the same time, we have pending sales up year over year. So that gap between new listings and pending sales hasn't widened extremely. It is wider than 2022, but very similar to 2023. You're going to see something interesting in the Altos Research data when we look at those numbers towards the end of this video. Riverside is an outlier as well for inventory. Moving into San Bernardino, so we have an increase year over year. Look at the increase in number of properties going under contract. So despite what you're hearing in the news, maybe that things are slowing down in some areas, we're not seeing it when we look at the county-wide numbers here. Moving into Ventura. Now, Ventura is always marching to its own drummer. We can see they are down for pending sales year over year. It isn't necessarily a bellwether for things to come in the rest of SoCal. I thought maybe early on when we saw these decreases in pending sales, but they go down, they go up. Ventura has the fewest number of properties at the countywide level. San Diego, another one where we see a slight increase year over year in the number of new listings, but a pretty good sized increase, definitely a higher increase in the number of properties going under contract. So there are your single family numbers. What are you seeing out there for single family homes? Moving into the multifamily data, one of the only places you're going to get these numbers pulled from the California Regional MLS, anything 2 units and larger. And we're looking at sold, we're looking at the properties under contract, and we're looking at the new listings. So we can see in Orange County that we have an increase year over year in the number of new listings and pending sales and sold. The reason the sold numbers are up is because in the months before November, we saw an increase in number of pending sales. So it's obvious that's what has to happen for a property to sell. It becomes a listing, goes under contract, and then goes to sold. Same question I asked with the single family data. Do you prefer the previous chart, number one, or do you prefer this bar graph, number two? Let me know. LA multifamily up for number of new listings, close to 2021, and at a higher level for pending sales, but nowhere near 2021 for pending sales. Interest rates were much lower in 2021, and why that's relevant for multifamily and investment properties is it makes it easier for the property to pencil when less money is going to debt service. Moving into Riverside, we have a sizable increase in new listings and an increase in properties going under contract year over year, but not a huge increase. And we have an interesting twist back in 2021. Again, because interest rates were so low, it was easy for properties to pencil, and you can see there that we had a lot of investors out there writing offers in 2021 in November, maybe trying to do their 1031 exchange before the end of the year, for example. Same thing in San Bernardino, increase in number of new listings. Haven't seen it this high since 2018, 2019, and we have pending sales up slightly year over year, but not like 2019. So interesting trend. That is the effect of higher mortgage interest rates, making it tougher for properties to pencil. And Ventura just doesn't have that many properties in general, but we can see here that they're up for new listings, pending sales pretty flat. San Diego has consistently been high in the number of new listings, and we see that trend continue this month as we've seen it through the year. But we also saw an upswing in the number of properties that are going under contract. Maybe there were some folks who were able to lock in that slight dip we had in mortgage interest rates, which some of it has since been erased. But we can see here that the number of properties going under contract is almost where it was in the crazier days when mortgage interest rates were half of where they are now. So interesting to see what is going on for multifamily in Southern California. I hope you're still hanging in there. I know I'm throwing a lot of numbers at you. If you're enjoying these numbers, you're our kind of people, and we should definitely be working together if you're looking to buy or sell real estate in Southern California. Median home price madness. What is going on with median home prices? Well, typically this time of year, as I always say, we see a drop in the median home price. It is what happens as we get later into the year. Peaks in the late spring, early summer, and then goes the other direction. Now, it was atypical back here because of the dramatic increase in mortgage interest rates due to the war with Russia and Ukraine and other factors back then. Now, what has happened? Well, we can see that Orange County, month over month, has increased in the median home price. So that's atypical. And we can see a drop in LA and Riverside. That is typical. Now, year over year, we can see an OC is up 5.8%, LA 1.7%, Riverside 2.2%. If you factor in inflation, LA and Riverside, that's not an increase at all, actually slightly negative. But Orange County is still up year over year. And San Bernardino, Ventura, San Diego, we can see that month over month drop. Not atypical. What'll happen is it'll drop again into January, and then it'll turn around and start to go up as we get into spring. San Bernardino year over year, that is 8.1%. That's the biggest year over year change, bigger than Orange County, which is typically the highest. Ventura is down year over year, 0.7%. San Diego is up 3%. So Ventura being a negative number, we haven't seen a negative number since we had the big mortgage rate increase in 2022, and we were seeing year over year decreases in the median home price. We're seeing it here in Ventura. We'll have to keep tracking that. And again, if you factor in inflation, that's a much bigger negative number year over year. And here we are, some of my favorite data, the Altos Research Reports. Raise your hand if you like it, or just sign up for these. So they come to you and you can see them every week. There's crazy cool data in here. And did you know we can look at the national numbers? Yeah, we've got that. And if you want it, subscribe to it. It's a big wide net when you look at the national numbers, but you can see here that nationally inventory has turned. We were up and definitely up higher than years past and heading in the wrong direction for this time of year, but now it's turned and inventory is headed the normal direction. I shouldn't say correct. I guess this is just the normal direction for what happens, and you can see it in all these dots. These dots are year over year that inventory through the end of the year should continue going down. All right, moving into Orange County. So Orange County, we see the inventory has turned and it had actually flattened out a little bit. And this is the different quartiles. So you take the market, divide it into 4 quartiles. That's what quartile means, is 4. So divide it into 4 quartiles for the pricing, and then the median price for each quartile is right here. Now what's interesting, I have my own home for sale right now, and I have it listed at that top quartile median home price. And what it's showing here is that the days on market for this top quartile is 112. So it is definitely slower at the top of the market. I can attest to this and trying to sell my own home. Things are still moving at the bottom of the market. But what's interesting to see is when you look at new versus absorbed. So there were 65 new listings at this second quartile, counting from the bottom up. Only 47 were absorbed. In the bottom quartile, we had 70 new and 71 absorbed. So that's actually a slowing at the bottom of the market. Los Angeles inventory has turned. It was as high as just about it's ever been. And now it has turned and started to decrease as it should. You can see where these dots are, that they were on the downslope. We'll see if that inventory continues to move that direction. When we look at new versus absorbed, it's actually doing better than it was in Orange County. In every case, more have been absorbed than new inventory, but still long time for those who are at the top of the market. Riverside. So if you remember, I mentioned Riverside is unique when we looked at the Altos Research Report from a data standpoint. And the reason it's unique is it hasn't turned. Inventory is continuing to go up in Riverside County, and that is definitely atypical for this time of year. You can see these dots. At this point in time, we should have been turning or on the downslope for inventory, and that does not appear to be the case. We will have to keep tracking to see what happens in the next few months. San Bernardino inventory has turned, headed in the normal direction, and we can see that new versus absorbed, still solid numbers, and that's why inventory is going down, because you can see the number of properties absorbed. What's interesting, and we see this sometimes in San Bernardino and Riverside, where the days on market is not typical, where the lower end of the market moves fast and the higher end of the market moves slowly. This here, you can see the bottom and the top quartile have the same median days on market. So that's an interesting thing to see. You would think if something is priced at a median of 325, it would move quickly, but in San Bernardino, doesn't seem to be the case. Ventura, so we saw that year over year median home price drop in Ventura. Now inventory has turned and inventory is dropping. It's still pretty high. Interesting to see how fast the bottom of the market is moving. So 21 days, but that new versus absorbed, those numbers are pretty close. So we could start to see the bottom of the market soften a little bit. But that's why we do this. We're running through these numbers together. San Diego inventory took a big drop. Look at that. It just turned and went the other way. New versus absorbed. Yeah, solid numbers for San Diego. Still top of the market, taking the longest. What are you seeing in these numbers that I'm missing? Or what is your perception of what's going on out there? Let me know in the comments below. Make sure you subscribe to those Altos Research Reports that we all know and love, and you'll be subscribed to our free weekly email newsletter. Ran this poll after the election, kind of mid to late November. Wanted to get an idea of what home buyers are waiting for. Wanted to see how important it was, the new president coming in, and we can see 9% waiting for Trump to take office. The overwhelming majority, almost 50%, are waiting for prices to drop. Next, we have waiting for rates to drop, about a quarter. And then we have almost 20% that said, look, I'm not waiting, I'm out shopping right now. So this is an update to show you exactly the mindset of home buyers right now in this current market. We're racing to the end of the year. How do you think 2024 is gonna end, and what is 2025 gonna look like? We're gonna give you some of our thoughts on that in the next videos. This has been Christian Walsh, real estate agent with Wire Associates, and the next thing you need to know is in this video right here.